Welcome, learners. Today, we're taking a deep dive into some fresh financial intelligence.
That's right.
Looking at a major player in global electronic brokerage. We've got their latest Q2 2025 earnings
Yep.
release
Hot off the presses.
and a really fascinating interview with their founder and chairman to unpack.
Our mission today really is to just cut through the noise. We want to pull out the key insights from these sources,
Right.
help you quickly get what's, driving their business and what their leadership is seeing on the horizon, or maybe what they aren't seeing.
Yeah, get ready for some pretty eye-popping numbers, actually, and a market outlook that, well, it might just surprise you. Okay, so let's unpack this. The core of our deep dive today is Interactive Brokers Group, their Q2 2025 results. What were the standout figures? What jumped out first?
Well, the headline is pretty clear. It was a record-setting quarter for them.
Okay.
So for the 3 months ending June 30th, 2025, Interactive Brokers reported adjusted diluted earnings per share of 51 cents.
51 cents. And how does that compare?
That's a very significant jump from the $1.44 adjusted they reported in the same quarter last year.
Got it. So strong EPS growth. What about the top line, revenue?
Yeah, revenue also looking very strong. Their adjusted net revenue surged to nearly $1.5 billion, $1,480 million to be exact.
Wow, $1.48 billion.
Yep, and that's up from roughly $1.3 billion adjusted a year ago.
Okay,
And maybe the most striking number, their pre-tax income.
right.
That hit $1,104 million for the quarter,
Over $1 billion pre-tax.
over $1 billion, compared to $940 million adjusted in the prior year.
And I think we heard this was the first time ever, right? Their actual profit went over the $1 billion mark for a single quarter.
That's right. First time crossing that billion-dollar profit threshold.
I mean, crossing that, it isn't just a number, is it? It sort of signals a new level of scale, maybe operational maturity for them. What does that kind of, financial muscle mean for them
Right.
strategically?
That's a really critical point. Hitting $1 billion in quarterly profit, yeah, it's impressive, but it also suggests they've hit this critical mass, this level of efficiency that, frankly, few competitors can probably match.
Right.
It gives them huge capital to reinvest. Technology, expanding products, maybe even acquisitions down the line. It really solidifies their position.
And gives them resilience too, I imagine.
Exactly. Resilience against market bumps.
So, okay, these headline numbers are setting a new bar. The obvious next question is, what's fueling this? What's driving such, extraordinary growth? It wasn't just a small increase, right? We saw some massive leaps.
Absolutely. You look at the year-over-year numbers, the business highlights, and it's just a story of rapid expansion.
Like what?
Okay, customer counts just exploded. They hit nearly 4 million.
Yeah.
It's a 32% growth rate year over year.
32% growth in accounts. Wow.
In customer equity, that's the total value of assets clients hold with them, that soared 34% to over $664 billion.
Oh.
And customer credits, basically the cash balances clients keep there, also climbed 34% to about $144 billion. $143.7 billion, technically.
So basically, more customers coming in, they're bringing more money onto the platform, and they're holding more cash there too. That's a powerful mix. How did that flow through to commission and interest income?
Well, that increased engagement, it directly fueled commission revenue. That rose by 27% to $516 million.
Okay.
And that was driven straight up by higher customer trading volumes.
Yeah.
Stock trading volume up 31%, options up a solid 24%, and futures up 18%.
So people are just trading more.
A lot more. And then you look at DART's daily average revenue trades. It's a key industry metric for activity. Phenomenal 49% increase there, reaching 3.55 million trades per day on average.
49% jump in daily trades. Incredible.
Yeah. Then there's net interest income. Also healthy growth, up 9% to $860 million.
And where did that come from?
Primarily from those higher average customer credit balances we mentioned, plus increased securities lending activity. Although it's worth noting, this quarter included a unique item, about $26 million as a one-time credit. It was related to recovering some taxes they'd paid in the past.
Ah, so like a little tax refund boost.
Kinda, yeah. A nice bump, but obviously not something you'd expect every quarter.
Right. Not recurring. Were there any areas that didn't grow?
Yeah, actually. Other fees and services saw a slight dip, down 9% to $62 million.
Why was that?
Mainly due to a $7 million decrease in risk exposure fees. Those are fees tied to certain types of leverage trading.
Okay.
Though that dip was partly offset by a small $2 million increase in FDIC sweep fees, related to moving customer cash around.
Got it. And what about efficiency? You mentioned the scale earlier. Did expenses keep pace or did margins improve?
Well, G&A expenses, general and administrative, they did increase by 17% to $61 million,
Okay, why the jump there?
primarily driven by an $8 million increase in advertising spend. So they're pushing to grow their reach.
It makes sense. But margins?
Margins held up remarkably well. Their pre-tax profit margin this quarter was a very strong 75%.
75%. That's huge for financial services.
It is. And it's actually a slight improvement from the 72% reported a year ago. So very efficient operation.
Now, one metric that didn't hit a new record, and the chairman himself pointed this out, was margin loans.
Ah, right. Margin loans.
They increased, sure, by 18% to around $65 billion. But he said this wasn't necessarily bad because margin loans always carry some danger.
Yeah, that sounds like him. It speaks to their cautious approach to risk.
Right, they're not just chasing growth in every single area, especially risky ones.
Exactly. They seem to value that long-term stability over maybe squeezing out short-term, riskier gains. It's been their style for a while.
Now, something else that's kind of unique about them and really fascinating is how they manage their own balance sheet, this currency diversification strategy. You don't hear about that from every broker.
That's absolutely right. It's a key differentiator. Interactive Brokers doesn't just hold its own net worth in U.S. dollars, like most U.S. companies.
So what do they do?
They've diversified it into what they call globals. It's basically a basket, a portfolio of 10 major world currencies.
Okay, interesting. How did that play out this quarter?
Well, this quarter, with the U.S. dollar, fluctuating, this strategy alone, just the currency diversification, it boosted their comprehensive earnings by a huge $301 million.
Wow, just from currency moves.
Just from the way they hold their own capital. Because the dollar value of that global basket increased about 1.6%. It's a really clear example of their proactive financial management.
Yeah, it shows they're thinking about risk and advantage way beyond just the trading side.
Totally. And it all ties back to what they always emphasize, their 4 decades of focus on technology and automation.
Right, that's their foundation.
It's not just talk. It means they can give clients these sophisticated tools, low costs, good execution, risk management, research, all that stuff.
Yeah.
That tech focus is really what enables their efficiency and scale.
Okay, so these impressive financials, the unique strategy, that's one side. But what really brings it to life is hearing from the top. We got insights from the founder and chairman himself. What's his take? Where does he see things going?
His outlook is, well, it's remarkably optimistic, strikingly so, actually.
How optimistic?
He literally said he doesn't see any dark clouds in the horizon and can't think of anything that will stop this rally.
Seriously, no dark clouds in this market.
That's what he said. And he expects this rally to continue for the next 2 or 3 years.
2 or 3 years. That's an incredibly bullish call, especially when you hear so many other analysts pointing to potential, headwinds. What's giving him that kind of confidence? Is it just their own business doing well, or is he seeing something broader?
He attributed it mainly to policy factors.
Okay.
Specifically, he mentioned Trump policies as being very favorable for equities. He highlighted things like doing away of all the barriers to business, less regulation, and more incentives to save and invest. Now, it's really important here for you, the listener,
Yes.
to understand this is a direct quote from the chairman. We're reporting his view on market drivers, not endorsing any political stance ourselves. It's just how he sees the environment shaping up.
Understood. It's his analysis of the policy landscape's impact. Did he touch on anything else driving the market, like investor behavior?
He did. He mentioned that interesting split we've seen this year, right?
Yeah.
Between retail investors and the big institutions.
Yeah, that feels like a big theme.
His take was that the institutional investors scared each other about the trade policies and basically got left behind.
Oh, okay. Well,
While retail and the sophisticated individuals they continued buying, he thinks the institutions will still have to catch up.
so he sees institutional money as potential fuel still waiting to come in.
Exactly. He called it great power, firepower that is still to come into the market. A potential tailwind, in his view.
Interesting perspective. Now, beyond the traditional stock market, they've also moved into newer areas, like crypto trading, predictions markets. What's the outlook there, especially, with crypto regulation being such a hot topic?
Yeah, on crypto, he sounded pretty positive about the regulatory side. He said that from everything we hear, the regulations will be favorable.
Okay, so he expects clarity, and favorable clarity at that.
Seems like it. Which, in his view, means there'll be more and more crypto trading on platforms like theirs once the rules are clearer.
And what about those predictions markets? That's still kind of a niche area.
He said they're very excited about those markets,
Yeah.
and they definitely see continued growth there.
Did he give any examples?
Yeah, he pointed to a current event.
Okay.
Said this newly controversial mayor election in New York City is basically taking the lead here.
People betting on the outcome.
Essentially, yeah. He said people are interested in expressing their opinions so they can buy yes or no contracts on Mandani, for instance. Buy a yes contract for maybe 70 cents.
And if you're right, you get paid out $1.
Exactly, $1 payout if correct. It's basically a marketplace for opinions, a different way for people to engage with current events.
Well, that was quite an exploration, incredibly insightful. We've seen Interactive Brokers putting up record profits, really impressive growth across the board.
Yeah, driven by that high customer engagement and some pretty smart strategic financial management, too.
Definitely. And then you layer on the chairman's, well, remarkably bullish outlook, plus those interesting points about retail power and these newer markets like predictions. It certainly gives us a lot to chew on.
It really does. And it raises a big question, I think, for you, our listener. If this market optimism continues, maybe fueled by those policy views the chairman mentioned, and by individual investors staying strong, what does that mean for platforms like Interactive Brokers going forward?
Right. And what happens if those institutional players do eventually catch up, as he put it? What kind of patterns might we see then? Lots to think about.